Let's turn to oil. Crude settling down more than 1% today, closing out its worst month since November of last year as the OPEC Plus conference kicks off Sunday with some major headlines already breaking. Here to discuss what we know, what we can expect, how investors might get ahead of the game is Sankey Research President and lead analyst Paul Sankey. Paul, happy Friday to you. It's good to have you. So in person now? Is that what we found out?
No. Bloomberg reported this morning that they had switched to in-person in Riyadh, the capital of Saudi Arabia, which was a shock and a negative shock to the market because as of last night, we just assumed it would be a rollover here and the meeting would be very fast. But it was pretty much misreporting from Bloomberg, unfortunately. And it seems it's still a virtual meeting. It's just that the Kazakh oil minister will be visiting Riyadh, probably to take a carpeting, to use probably the right phrase. Because of overproduction. You know, they're not respecting their quotas as much as they should, and they're also meant to cut additional barrels to make up for previous lost quotas.
So that's where the bull argument comes in?
Well, today, the news that it was going to be held in person made everyone think there's a huge disagreement and we've got a problem and they can't roll over the cuts as expected. But the fact that this is actually just, you know, a roundup of certain members by the Saudi oil minister indicates that we will get a rollover and there may be a push through into 2025 of cuts, which would be, in theory, a bullish outcome. Probably bullish for the equities, you know, that the market would like the knowledge that Saudi's going to continue the cuts into 2025.
So Paul, in terms of speaking, what does drive equities? And I think the lead-in was something along the lines of oil's had its worst month in a while. I mean, oil prices have been flat to sideways. I mean, frankly, there's been a lack of volatility in oil prices, in my view, as someone that's been investing in the sector for a long time. Doesn't that open up the fundamentals to people about just the deleveraging that's already going on, the free cash flow generation that's part of the gospel that I think management teams have to follow? But the other real driver here is it seems like we're in a huge period of M&A. And, you know, Conoco, who to me 5 years ago, 7 years ago, 10 years ago, was leading all the majors in terms of divesting and getting lean and mean, and yet they're buying and they look like they're late to the party. So talk about the M&A bonanza, because to me, it's what's next.
Well, the good news in what you were saying is that you're getting the lower oil volatility because you have the Saudi spare capacity and then you have the U.S. producers that will cut in, that can't handle low prices. So you know that the oil price can't go too low. Overall, we've stayed in a range, as you said, and we think that gives the big oils a higher multiple because the market just couldn't handle the volatility. Having said that, you mentioned that the previous worst month was November. That's typically a seasonally bad month for oil. The problem is we just went through a really bad May, which is typically a good month for oil, right into driving season, obviously. And so the action of May is concerning. All eyes, obviously, on the usual suspects like China, et cetera. But really, Saudi has little choice. It has to maintain the cuts because if they increase production, oil's going to head towards 60. For the M&A, absolutely, the companies are consolidating, they're cutting costs, they're maintaining capital discipline. In the case of Conoco, they're adding free cash flow with Marathon to get them through a major capex phase while they build some huge LNG projects and the Alaska Willow project. So, yeah, I mean, I wouldn't say Conoco was late to the trade because obviously they did Concho right at the bottom, which got them big in the Permian, and they've continued to add stuff. What's unusual for us is we like the big guys. So we like Exxon, we like Chevron, we like Conoco. We're now looking around at the mid-cap guys, and it's a little bit tough to know who to love. You know, do you really get excited about a Devon OVV merger? I don't know how exciting that really is. And then finally, the performance of the stocks, for example, today has been great given the commodity, and particularly great for the refiners. So your overall point that people are buying into the oils seems to be holding up despite a very weak commodity. Yeah.
So we're not a political show, but just walk through what do you think the implications of a Trump presidency versus a Biden presidency would be on the space?
You know, historically, the classic is that actually the oils perform better during the Democratic administrations and worse during the Republican. And so you saw a really tough time during Trump's first presidency, notwithstanding all the deregulation and everything. It was just a terrible time for oil prices, and obviously you had COVID. But the sector was terrible. Under Biden, the sector's actually had some great years. In fact, we had 2 consecutive years where we were the best performing sector in the market. We do need deregulation. The big theme, the mega theme that everybody's talking about is AI energy and how much electricity is needed. And we're increasingly thinking you're going to have to put power plants in the gas fields. And actually, this is a Rob West idea, Thunderset Energy. And actually, you're going to have to move the data by fiber optic because you can't build pipelines and you can't build wires. And that's fascinating because it's such real-time stuff that's happening, right? I mean, this is just so quick and we're having to think so fast about how this all plays out. Last week in my research, I was quoting Mark Zuckerberg saying, you're going to have to build a nuclear power plant, 1,000 gigawatt power plant, just to feed a model. You know, the idea of a nuclear power plant that just feels a model, and of course the interviewer points out Amazon just did that. They just did a deal with Talon for 935 megawatts of power just to feed their big data. So, you know, the scale of the dynamism here is really remarkable, and we're all turning our attention towards energy.